one, get 5% down on the next one. You can always leapfrog and buy another house with 5% down or 3.5 if you didn't use your FHA loan yet, until it doesn't make sense, you know? So what's just a slippery slope is just knowing is just like some clients you just know, it's like I've had clients ask me like, what's the loophole? Like I've had people flat out tell me I don't plan on moving in. Like at that point, for me, it's something I can't continue with.
What's
I can't,
I,
yeah.
what I guess what's an example of trying to ask a question. What is an example of something that would make you look closer at a loan? Um,
Yeah.
Particularly, I guess we could talk to pertaining to like occupation fraud, but is there anything else that would come up on a loan that you'd be like, whoa, wait a minute, let me take a closer look at that there, buddy boy? You know?
Yeah. Well, we had a client where um their reason, they had to give a written reason as to like why they were this exact purpose, why they were looking into getting a multi instead of and moving from the single. And the single was like a big nice single family unit. Um and his reason at the time was, I'm getting a separation. Okay. He's getting a separation. Now the
Yeah.
underwriter wants to see the separation agreement. There isn't one because he's not getting a separation. He's just saying he was so that he could have a reason. That hits the fan real quick. There's no separation agreement. It doesn't line up with what you said. Someone is not being truthful. There's nothing you can do with that, right? So generally, like the things you say need to line up, right? It's but other than that, I mean, yeah, there's all sorts of things if something doesn't make sense. But generally, like I always explain to clients, like, we're in the world of AI, right? It's probably not going to be like it used to be, and people aren't going to get away with things as easy as they used to.
Right.
Um, and insurance companies are also changing the game a little bit. It's not me that shows up to somebody's house. It's usually an insurance company that tips off the bank, that tips off, the FBI. So it's like it's something that I'm careful with. At the same time, there are people, including myself, including like a lot of you guys, that have a passion for multifamilies and accumulating properties. The way to do it is to do owner occupied homes, is to leapfrog from one to the other and to make sure you're using all of that income that you can to depart a unit and use that rental income, and then use the rental income on the subject property that you're buying so that your DTI is always staying afloat. Um, so I don't know. That was a really long-winded answer, but that EJ asked that, right?
No, wrong Libra. Me.
Wrong
I
Libra? Who
asked.
who asked me that? Oh, that was you that asked me that?
That was me,
Oh,
yeah.
okay, okay.
Hey,
So
on that same line, what if your partner, um, they're not on the you own a house or whatnot, but they're not on that. Can they get something, or the bank gonna look at that saying, "Oh no, you live with your husband, even though you're not on the lease or on the deed."
They could, right? It's just about if they're going to move into it or not. So like anyone could buy a house on their own. Like just because you're married doesn't mean you both have to be on the mortgage. But the it's about if they're going to move in. Like so if you both own a home together, and or is that the question? So like
Yeah, like
like
let's say I
where it becomes an issue is if you have two married people, right? And they're both buying homes at the same time. They're both buying primaries. If like when you buy a primary, you have to live there for 12 months. That's the understanding. There are exceptions under 12 months, 6 months, below 6 months, no exception. Occupancy fraud, doesn't matter what the reason is. If you just move out 2 months later and say, oh, I'll just come up with an excuse. It's just, it may never like catch up to you or something, but if it does, if you were ever in a bind, it's like you wouldn't have anything to go off of. But where something that's common is like two people married, want to buy a primary, a month later, the other one wants to buy a primary. It's about what you intend to do with it, what you say you're going to do with it, that makes it okay or not. So it's not okay for two people to buy a primary, separate primaries, unless you're both living in them and like going to separate and actually like live in, it's when you're asking a loan officer, that's the answer you're going to get, so it's never like it's there's no like the rules of the programs are going to be for that. If this person's buying a primary for 12 primary residence, they're signing off that they're going to live there for 12 months. This other person is too. They may get the loan, they may get the mortgage, but they're also signing off that they're going to live there for 12 months. Whoever isn't is the one that has to worry about it. That makes sense.
Yeah, got.
But that's the thing these days. Like, I think people are wealth builders. Like, I think young people are wealth builders these days. I think that, like, people are really like wealth conscious right now, and like multifamilies are the thing that makes the most sense in today's market. That's why I really want to attack, like, helping agents understand the differences between an FHA loan and a conventional loan, and the different ways you can use your file to qualify for the next one, for your first, second, third house. That's why some people talk about the 4-3-2-1 method. That's the easiest, most foolproof way you can do it if you qualify. If you go 4-3-2-1, 4-family-3-2-1, or 4-3-2-2-2-1, you're not going to have any problems. You're going down units. You're going to have way less to explain. If you're buying a single family and then your plan is to get a multifamily after, you can just expect that you're going to have fewer options. It's not going to be the same type of search. You're going to have to explain yourself, and you're going to want to make sure you're telling the truth about the explanation. So
because they think you're going to be comfortable in a space by yourself.
Yeah,
versus
it just doesn't
moving in a. I see it. It makes sense.
right.
I mean,
If you have a big, nice multifamily that your whole family's in, they're gonna want, all right, like, well, why are you gonna move your family out of that house to live, in a shared space in a multifamily?
mhm.
So usually, like, I mean, I've done it the other way. Someone bought a condo, they had a tiny condo, 1 bedroom. Wife got pregnant with twins, and that place does not make sense overnight. So now they want another house. They want a multifamily this time. It's really easy to find a multifamily that's more than 1 bedroom. Like, the explanation is something I'm comfortable with. It's going to be really easy to process. I'm comfortable that the underwriter is going to understand that. It's like very easy. Where it's just where it becomes tricky, is like if the client's explanation doesn't line up, more times than not, it's there's a reason. So, and that's where it's like, it's part of my job. So like, but in general, like, I trust the client unless they flat out tell me, like, things have to line up. I'm not going to make up their reasons for them. It'll just be, what's the reason? I'm not going to come up with that reason, but it's usually something in their life that has changed, or, seeking more space or something like that, or seeking a closer commute to work. Those are like good examples of reasons.
All right, with
And also
the
downsizing. Like, all my kids just went to college and moved out, and I have a 5 bedroom house, and I'm a single parent, there's can be things like that that are reasonable. It's just has to be a reasonable explanation.
Gotcha.
Yeah.
So with the down payment assistance program, the no income limit part,
Mhm.
that's on the first time home buyers part, as you said, correct? The first
That's on the grant. So the grant,
grant.
if you are a first time home buyer for the grant program, there's no
Mhm.
income limit.
Okay.
If it's your and the grant program is a 3% down conventional,
Okay.
and it's after 6 payments falls off completely.
Okay.
It's nothing
So
you have to worry about.
3.5%. So they got to put down 1.5 to cover the full 5%.
If you're doing a 5%, yeah, yep.
Okay.
That one, let me just double check if multis are okay with that.
Yeah. And then let me sound stupid. Is there a 3.5 conventional too? That
No, you don't sound stupid. No,
okay.
there's the 3 point, there's the 3 point. Let me just double check. There is a 3.5% FHA.
Right. Yes.
Hang tight. TPA grant. I'll get you I'll get you because I lumped it all together here.
Mhm.
The grant has 1 to 4 units. No, I'm sorry,
Okay.
1 to 4 units conventional, 1 to 2 units on FHA.
Got you. All right.
So
Mhm.
for some five, not required.
Now with those grants, does it affect anything like closing time, interest rates of the original mortgage or anything?
Yeah. So the interest rates, if you compared them to a regular FHA loan, are going to be higher.
Okay.
So that's another reason why if somebody has something like an asset account or retirement account, I'll always explore that first.
Mhm.
Because like in general, it's typically a better idea. I tell clients too, you're going to get a better deal if you use your own assets. If you're going to take a down payment assistance second lien, there's two things going against you. A, you're either paying that back to us, or B, it's going to be harder for you to refi in the future because you're going to have a second lien on your house to pay off. So
Mhm.
if we can get it done without that, that's the first play. If something like that doesn't exist, we go for the grant. If the grant's not pricing out favorably over the repayable second lien, then
Mhm.
we'd go with that. That one's the most flexible. But
Okay.
the overall the interest rates on those are higher.
Okay.
Yeah.
And then in those two scenarios with the products that you guys offer with the forgivable loan or and the other one, does that lessen the pre-approval amount because you're now counting that debt a part of the transaction?
Say it one more time. So
With the down payment assistance one, the one that might like be a second lien,
oh yeah,
is
yeah,
that
yeah.
lessening the pre-approval amount?
So this is like actually one of the other benefits to it. So it making your monthly payment higher, it weighs on your DTI, but your DTI doesn't have a cap. Like when I used to do loans with Mass Housing, a lot of their products have a 45 DTI cap.
Hmm.
So you can't go over a 45 DTI. You can go to a 56 on an FHA loan with these. So
Yes.
you can run your as long as it passes automated underwriting, you can go to whatever automated underwriting passes you at versus when we did Mass Housing, it was 40 over 45. Can't go over 45. It was like an overlay. You can't go over
Mhm.
certain DTS. I think they have some programs nowadays that like allow you to go higher than a 45. I'm pretty sure. But for a lot of the ones we were doing, we had to do a way lesser pre-approval for it. These ones,
Okay.
like the rate being higher, it does weigh on your DTI a little more, but nowhere near where it would like if you had to cap it at a 45. Like if you compared the two pre-approvals, they're going to be way
Mhm.
different.
So Nick,
Okay.
you're saying there with your program that you're speaking of, forgive me, I missed the beginning. but there's no DTI to it. Which program is this? Or excuse me, there's no limit to the DTI, is what you're saying. So somebody could theoretically have
there is a DT. There's no, not necessarily. Not that there's no limit. It just follows the same DTI as a regular FHA loan. So like regular loan all the way high. On these ones, we can also go to a 57.
Gotcha.
Versus some DPA programs have a cap of like a 45, which means you're writing a way smaller loan. It's like, hey, you get the down payment, but you're looking for a $300,000 multifamily. These are that's why I say I really mean it when I say like our DPA is going to be the fix of it is that they are very flexible in every area. DTI, the income qualifications, the not being a first-time buyer, the flexibility to buy in other states and other parts of the state. All of those areas super flexible to qualify. It's just the downside is the payments a little higher.
Gotcha. Thank you.
So for me, it's like
I just
they're
saw
a
your
blessing
picture. I'm
because
excited, and I have to call you. All right, I love you. I gotta set up.
I love you too, Jeremy.
Hey, all right, baby, love you. Hey, there it is. Yeah, for real. This one's oh shit.
He didn't know if he was off.
is he still here?
He muted, but he noticed.
Okay.
Mhm.
There's one other product, like I don't know if we're cutting off on time, but there's one other product we have that like I haven't had the chance to use it yet. But it is unique. It is, and I just think most people don't. I think a lot of people think it's like really advanced, so they're afraid of using it.
Mhm.
But it is it's a bridge loan. So if you have a client that is trying to sell and buy, I think it's common right now. Like I think a lot of people are selling, like buying with home sale contingencies, and they're okay to put together. But if your client is like just getting beat up over home sale contingencies, there is an option where, you know, if they have a home they're trying to sell, they're trying to buy a new one, they can't get an offer accepted. We can do a bridge loan where we will refi that first mortgage on their existing home. They can do a cash out refi up to 75% of the LTV. So they can get their down payment money. The loan is structured with no payments due for 12 months. So we can remove it from their DTI as if they sold it because there's no payment due on the house. And they can have their cash from that and the weight lifted off their DTI to buy their next house, and it won't be sorry, I live across the street from an ambulance place. They can buy the next house without that home sale contingency because we don't need them to sell it anymore. The way that first refi works is it's an interest only payment. And it doesn't kick in for 12 months. So that just means they have 12 months to sell this house after you sell the house or refi it. They could decide we don't want to sell anymore. We want to refi out of that program and into something normal if they qualify for it, or they sell it.
Mhm.
If they don't sell within 12 months, the payments kick in at that 12-month. And that's where things now they're going to owe all of they're going to owe a balloon payment for all of the interest payments that so like the goal of this is to never make it to that 12 months. All that interest that is accumulated is now due. If let's say they sell the house after 6 months, each month that passes, that interest only payment is getting tacked on to the payoff. So 6 months pass, 6 months of interest only payments get tacked onto the payoff. When you do sell that house, those need to be paid off as well as the original house. The original mortgage. The idea of it is to hopefully not have to like come out of your shoes trying to make an offer on the next house just because you have a home sale contingency. It's an option for people that are looking for it. It's not for everyone. Some people are fine having that home sale contingency. Some people are really nervous having to like juggle two mortgages. So it's not something I push on people. But it is an option.
So Nick, so this option that you just mentioned, the bridge loan, would you say that would be geared more towards investors as opposed to solely just people looking to sell and buy? Because it sounds like to me, and correct me if I'm wrong, it sounds like to me a seller can use this loan to set up their purchase their home, and then they have 12 months to sell their home, or an investor can use that to purchase a beat down house, renovate it in like 3
Yes.
months, and then sell that ahead of the 12-month mark, only paying up to that certain amount of time of interest. Am I on the money or am I missing something?
I think you are. You know what? I haven't thought about it that way. I know that whatever you do for the second mortgage, like we could use that for, I don't think it has to be a primary. Like, you know, I
Gotcha.
think I think it's designed for people who like don't really have the deposit for the next house. So it can help give you that equity for the down payment. But also like alleviate the home sale contingency, get rid of the debt so that like you can afford that house and have a pre-approval doesn't have a home sale contingency on it. So like I know that's like really where I've focused on it. I can double check and find out from an investor standpoint. The only thing about that is like for
Are we
an
talking about
investor
203K
standpoint,
investor? Nathan? I just want to make sure,
me,
not to cut you off, but I want to make sure I'm following. Are we talking about 203K investor or non-primary investor? Because
I mean,
203K is still primary, isn't it?
I'm just asking as a blanket
203K is a
statement. I
primary.
thought I heard him say that he didn't need to
Mm-hmm.
be primary resident. Just making
Mm-hmm.
sure, because if that's
So,
the case, then I'm just trying to make sure those scenarios I elicited actually are viable and they make sense, as opposed to,
mm-hmm.
Yeah.
you know what I mean?
I can find out. To be honest, I don't know 100% for that one. It's just
Mm-hmm.
not one that that I look at every day. It's like
Gotcha.
some people are interested in it, and like lately, since we took it on, some people have been like really close to doing it, and then they were like, nah, we're just gonna like have our home sale contingency. Some people are just like, we want to keep it, you know, like one less thing to worry about after we buy the new house, you know?
Mm-hmm.
So,
Yeah.
but there's no, you know, like you could sell the house a month after we closed it. It's not going to matter. Those will have like a broker fee on it. So basically it's different than your normal loan. Like it's more set up kind of like it's like a non-QM loan where on those types of loans, we don't get paid by the lender. We get paid by the client, and that gets
Gotcha.
rolled into their loan as well. So the client doesn't pay for it, the lender does. That loan struggle, which the way that I plan on doing it when I have one is, hey, we're getting this cash out refi, we're getting this purchase. Like, you know, we're not trying to kill people on the cash out refi. You know what I mean? We're not trying to like make our normal commission on that. So, but I will find out. Nobody's asked me that yet, Nathan. That's a good question.
Appreciate it, Jim. I was the
Yeah.
the first people that came to mind were Shantae and Jeremy and EJ. Just because I know EJ speaks with, not to put your business out there, EJ, but I thought you speak with investors, and
Mm-hmm.
I'm thinking of VA veterans as well, looking to either downsize or looking to either start their family that could potentially take advantage of this. Aside from your VA loan, because I know you offer that. We've had numerous conversations about that, Nick. So I'm thinking ahead of thinking about my team, honestly, and about myself. So I appreciate you answering that. Thank you.
Yeah, of course. I will find that out. I'll reach out to my AE, and figure that out.
Appreciate that, brother.
but yeah, but I want to be a resource for any of you guys. Like I said, like my goal this year is to build. I think I've spent the last we really started submitting loans in December. So like part of my goal was to build a strong brand. You guys have a really strong brand. Like you have to work with a strong brand, and like I've got to match your energy on all of our stuff. So if I can be as cohesive as possible, that's my goal. But also to keep the client experience, keep the agent experience up, and like make sure, because like I know how much work agents put in. I know kind of what you look for in a loan officer for your day-to-day stuff. Like anything we can do to help add value, just ask. If it's open houses, we'll blow it out. I do want to drop you guys off our booklets. So like I have everything's backwards, but our slogan's own your next move. I do want you guys to have booklets and hats. I know some of you guys probably seen some of these kicking around. Got some training hats. Doesn't say freehold mortgage on it. It says our slogan. So it's not a, you know, so if any of you guys like to rock it at the gym, start a conversation with somebody at the gym, let them know you're a realtor. That's what our icon's about. So, but yeah, I guess products wise, that just about covers what we're seeing just about every day. Do you guys have any questions for me
I do.
on specific products?
I do, yes.
So
Sorry, EJ, go ahead.
So you talked about, Nathan mentioned the veterans loan. Hold up, cutting up in traffic. And then
Okay.
you mentioned the VA loan. You mentioned the FHA and conventional. You kind of passed by a little bit the mass housing one. You're going to be able to do mass housing once you have a commercial
Yeah.
space. That's
Yeah, I tried to sign on with Mass Housing. So like this is part of being a startup. You know, I do consider we're a startup, you know. So I started this entity last summer and we started submitting loans in December. When I called Mass Housing, they don't work with you unless you have a commercial space. They won't work with, even though, you know, any other lender will work with you if you have a office location. They won't unless you have a commercial space. So we're getting that at the end of the summer. Once we get that, we're gonna get on the wait list for Mass Housing, which
okay.
is it takes a while to get approved. So it's a part of my plan. But I'm just forthcoming about that because like it might be a year something.
Well, you said a plan. So what other ones are part of the plan?
Like the only products, like the main product. I mean, we also do. I'm sorry, I left out a whole batch. Product on our plan. I just don't have them yet. We also offer non-QM loans too. Non-QM meaning bank statement loans, DSCR loans. We do non-warrantable condos. I'm submitting one right now. Condos are a big issue lately, with master insurance policies being all out of whack. Insurance is just a nightmare for condos right now from all the natural disasters and bad weather. A lot of condos are in trouble with that. So we had a client that was trying to do this conventional. They were about to be cleared to close, and if turns out the master policy makes this condo non-warrantable. Nobody knew. The listing agent didn't know. The owner didn't know because they got financing last year on this place. Now this year, after the hurricanes and all this and that, new guidelines on master insurance, tighter rules makes this place non-warrantable. So we're able to flip it and continue as a non-warrantable condo. We do have those 15% down.
Jesus.
We do single unit approvals as well.
Hmm.
So FHA, 3.5% down, single unit approvals, not a guarantee. It depends on any of 100 things, as far as those condo docs go and budgets. And so they're tricky to vet. You can't really 100% vet,
Mhm.
spot approval, but if someone accepts the offer and we're willing to try it, we do that too. We also do that with a down payment assistance program. So you can do the 3.5% down.
Hmm.
I'm sorry, the 3% down and, oh, I'm sorry, no, the 3.5% FHA product with a spot approval. We can do that combo too if we have to.
Okay.
That's a
Probably need to
specific
familiarize
client. That's
myself
a,
with.
I'm sorry.
No, no, no. I cut you off. My fault.
Oh, no, no, no. I'll just keep rambling, EJ.
Okay,
Yeah.
it's very respectful too. I get it. I understand. I was like, you mentioned DSCR. I hear a lot of investors talk about DSCR, so that's something I have to look more into.
Yeah.
And then the bank statement ones too. I've heard commercial agent mention the bank statement ones, so I got to familiarize myself with those as well.
Yeah, we do those 12 or 24 months.
Hmm.
DSCR is actually like one of my favorite non-QM products because it's like the pricing is based on the ratio. So you've got an investor, we don't have income we can qualify. Like sometimes I have some people that like their stuff is so complicated, they don't want to qualify with income. They'd rather just go the DSCR route because they're so easy. And then worry about refinancing it later. It's all about the property on those. So, but yeah,
So why
bigger
would you
money
need
down.
those two?
What's that?
Why would you need those two? Because I think my knowledge of those two is like minimal.
Yeah,
To be
so
honest.
DSCR stands for debt service coverage ratio.
Hmm.
So, for instance, I had a client who's an investor and her job went from W-2 to 1099 like within 6 months. So I was like, we can't use your income because you don't have 2 years of being 1099. It's brand new. And she really wanted a house in Florida. So we were able to pre-approve her with a DSCR loan, which is it's investment only, can't be your primary, has to be an investment property. Um, it's typically like 20 to 25% down minimum.
Yeah.
Good Lord.
And
Good
and
Lord.
well, yeah. That's the thing. If you're getting same with bank statement loans. If you're getting around income, you better have down payment. That's the part of it. They're riskier. So
25%.
oh yeah. Oh yeah.
So that means on $1 million home, you come in with 25 racks.
Oh,
Not
a
250
$1 million?
racks.
I'm sorry,
250
200,
racks.
yes, Jesus,
No, more than that.
250 racks. Jesus.
Yes,
Jeez.
but keep in mind, it's an investment property. If you weren't doing a DSCR loan and you were doing an investment property, it's the same down payment. So
Okay, okay.
you know what I mean?
Oh,
So
okay, right, fair.
you're comparing it to an a regular investment, it's the same thing. So
Mhm.
that part of it's like expected. The what we look for is that the rents cover the mortgage payment at a bare minimum. That's a 1 ratio. 1 1 1. So mortgage
Okay.
payment is 5K, rent's 5K, that's a 1. If like mortgage payment, um if let's say the rents are 7,500 and the mortgage payment's 5K, that's 1.5. You know what I mean? So it's the better the ratio, the better the rate. So that's how the pricer works. It's not really based on the normal things that we look at.
Gotcha.
But that's really it. Like you order an appraisal, you submit the loan, all you need is a credit report, an appraisal, and you close. That's it. They can
So
close in 2 weeks.
so a DSCR is for somebody who doesn't have much employment history and they can't get a
Yeah,
regular loan and they're an investor. So like can you frame the answer like, okay, DSCR loans are for a person who is A, B, and C.
Yeah. DSCR loans for an investor mainly. Someone
Mhm.
who either cannot show, like a lot of self-employed people do their taxes a certain way, a lot of investors do their taxes a certain way. If our
Mhm.
income isn't qualifying, it takes that out of the equation completely.
Got you. Okay.
And that's really it. A and B, I'd say. Like that's really it. An investor who can't use can't go through conventional financing. Or yeah, an investor who can't go through conventional financing, period.
Mhm. And then can you
Yeah.
break down the bank statement one for me, please?
Yeah. The bank statement one is for self-employed. So bank statements are for self-employed borrowers. It can be your primary, it can be an investment, either way. For a self-employed borrower who cannot qualify for conventional financing based on their tax returns. So you got a self-employed person, their tax returns are showing, not very favorable things. Maybe they're at a loss. What we would do is take their business account, average their deposits over the course of 12 or 24 months. We have two programs, 24-month program, 12-month program.
Mhm.
The 24-month is a better rate because we have more info we're using, it's safer to use. The 12-month is a worse rate, but if your 24-month isn't giving you the income you want, the 12-month maybe is, because you had a better most recent 12 months, we'd use that.
Mhm.
But it's based on average income is calculated based on average monthly deposits.
And it has to be in a business bank
So
account under an LLC or something.
that I have to double check on as well. I don't think it has to be. I think it's
Mhm.
more so just better that way because we have to determine where the deposits are from. So if it's cleaner that way.
Yeah, because immediately I thought about drugs, so I asked that question.
Right. Exactly. We gotta figure out where the deposits are coming from. So
But
yeah,
Nathan
that's
on them.
awesome.
I had to take the block. I was like, I had to get clarity on that.
I got you, bro.
You see him all the
Awesome.
time.
Who, Nathan?
Yeah, Nathan.
Not enough, man. Not enough. This is the first time I've seen the inside of his house, I think.
Yeah, nothing to do with that. I'm bowing out.
Yeah, that's fair. Not many people from Thumbprint have seen the inside of my house.
In
That's
his element.
my bat cave slash
Yeah.
1950 colonial.
Like it. Um, but I mean, I'd say as far as products go, when a client comes in, like it's kind of, most of what we do is going to be your everyday stuff. People trying to qualify for their own homes. It's like that's just in general where 99% of my day is. The other stuff, it's like we have the avenues for it, and like for just about anything you need, or a client needs, we have it available as long as it's just about qualifying them the right way. There's always going to be something that like is exclusive to other banks. There's always going to be something we can or can't do, vice versa. So um, that's 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 the gist of the products. Um, but I don't want to take too much of your time. Do you guys have any other questions on process on anything?
I got a quick question, Nick. I mean, I
Yeah.
know it's a question we've talked about ad nauseum for years, but for the sake of the team and for the sake of just transparency, um, I know we talked recently about the One Plus program. Now, I know you mentioned mass housing as well, as those two programs emanate from essentially the same reality of creating home ownership for people who might need a little bit more help. how close are you to obtaining the ability to work with the One Plus program? And besides your 50K DPA, is there something that you have or you will have that compares to that product that we can push and that can possibly compete, you know, being a competitor that you are?
Yeah. So as far as like the 50K goes, that question, I think the closest thing we'd get is when we're signed up with Mass Housing
Gotcha.
and knowing what they have available. Because right now I'm not up to date with what they have available because I don't have like a login or any access to it.
Right.
As far as OnePlus, this is OnePlus, I think, is going to be a little more out of my hands and more about who they're willing to work with. Wait a second. OnePlus is a Mass Housing product. Okay, I'm thinking of One Mortgage, right? OnePlus is not One Mortgage, right?
No. One Plus.
Okay.
The One and the One Plus came in the same year. The One Plus stuck around because more people from Boston are like, "Hey, I need money and I want a house."
Yeah.
They think
But I
they're
Sounds
remember
like
that year
Boston.
very
That's how.
clearly. I remember that year very clearly because the One Plus wasn't as prevalent as the One was, but more
Right.
people wanted the One Plus. That's why you don't really hear about the One anymore. Like
Right.
3 years ago, I was talking to a client and I was like, "Yeah, we have products like the One and the One Plus," and then they're like, "Oh, we only see the One Plus," and I'm like, "Oh, well, yeah, the One
Yeah.
Plus is great," but you know what I mean? So,
I think that's gonna come with, yeah, it's gonna come with the Mass Housing thing. So again, it's like not something I have I know that I know that the office space comes first. I have that locked down. I'm just waiting to be able to move in. I've been told it's like looking like September on that. Once I have an
gotcha.
office space and it's approved, then it's like I go through that process. So it's in the plans. I just one thing has to come first. So
Understandable. Appreciate you, bro.
but yeah, I yeah, of course. Of course.
Yeah.
And yeah, so I guess like, um but I'd love to sit like if any of you guys want to sit one-on-one or grab a coffee or a lunch, I'd love to do that at some point too and talk a little bit further about how we can assist in anything. As yeah, I know it is a partnership. I always appreciate what you guys do. Nathan, you've always put me out there. I appreciate your work and I know that we're only as strong as the work I'm putting in too. So any opportunities you guys have, we're willing to basically do whatever. So
Nicholas, you're on my first call for a reason, and
I appreciate
that's not me being obsequious. It's just me being truthful. Like,
I appreciate that. I know
course.
you've always been that way, and I appreciate that, man. So um my part of my problem is my wrap up at the end. I don't know how to wrap these things up ever. So
Just turn it over to the host, Nathan.
where's the host at?
Looking at him. That's Nate.
Nathan's
No,
oh
Nate,
there's always things to happen to me. I get thrust in positions of leadership. Well, listen, Nicholas, I definitely appreciate you taking the time to talk to us. Everybody, please take down Nick's
Yes.
information. If you don't have Nick's information, Nick will put it in the chat, or you can reach out to me and myself and I. We are at 11:50 today. Nathan has an inspection at 1. We're past our time, but does anybody have any other questions for Nicholas? St.
I actually have a
Nicholas?
question. Did any of you guys go to the office location at all?
Which one?
The Dorchester office?
We're talking about Thumbprint.
Yeah,
Oh,
Thumbprint.
our office.
Yeah.
Oh yeah. We go sometime. Yeah.
Okay, because I've been meaning to get down there and drop off. Like I'm gonna have a pile of these when I'm done with the multifamily playbook. I'll drop those off too, but I'm gonna leave some hats and some booklets for you guys to take.
Yeah, today's the day. Actually, Angie's at her desk, and she'll be there till about 3 o'clock, I believe.
Yeah, 3 o'clock.
Yeah.
Today,
Mhm.
it'll probably, is it normally what, Wednesdays?
Yeah.
Wednesday, she's typically there. Yeah.
Okay. I probably won't make it there today just because I got a little bit of a stacked afternoon, but I will be there before next Wednesday or by
Yeah.
next Wednesday. Yeah.
If you want to just hit us up, or just hit me up and say, "Hey, are you going to be by the office? I'm planning on coming by during this time." My best travel days are Monday, Thursdays, and Fridays, so I can potentially
Yeah, okay.
plan a meeting there.
Yeah, I'll do that. We'll plan one morning. I'll shoot over there.
Perfect.
Awesome.
Does anybody have any questions for good old Saint Nick?
Nah. If I have any questions, I'll just contact Nick.
Contact Nick. He's very amenable. He answers the phone pretty much all the time. The times that he doesn't answer the phone, you get a text or you get a call back. He's very, very responsive, and I've been using him not using him. He sounds like a tool. I apologize. I've been working with him for pretty much the majority of my career. I remember that first coffee at Cafe Nero. I think about that all the time, my brother.
Sidewalk. I remember that too.
Oh yeah. Schedule a coffee, schedule a lunch with him, schedule a Zoom with him, talk to him about his products, talk to him about any cases that you might have. He's definitely happy to help you out. Fortunately, team, we have the rest of the day to make ours. I have to get going until you don't know. I'm not going to do Alex's thing. That's way too much. Everybody have a wonderful day. Be well, be kind to each other, and take note of that Freehold hat. That swag is fucking delicious. I love it. Look at that. Finger looking good. Mwah, 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 mwah.
That's a pretty cool logo. Can't lie.
Thank you. Yeah. Thank you. I'm gonna
Stage
get
with
one
the
over to you guys.
house.
I appreciate it.
All right, team. You be well.
I
Enjoy.
got shit to do.
I got shit to do, including cleaning this kitchen table, as you can see. All right, guys.
Thank you again.
All right, guys. Bye.